We are back. This time, we'll do a full analysis on this one. Not full analysis. What I was gonna say. Just had brain fart. I'm gonna show you guys the difference using indicators and going naked forex. And I've been getting a lot of questions on this, like, Koo, why did you move from all these indicators into like naked forex now? Well, I don't get why you did all that. It make no sense. Like why are you changing up your strategy here? Why are you changing up your methods now? My ultimate goal was to go naked forex. Hands down. Like I wanted to just strictly just understand looking at the candlestick patterns, the candlestick structure, the trend, and that's it. The main window. The main window is the most important thing to look at, because your candlesticks are creating the price, right? There's always a price at that candle, resistance price, support price, whatever the price is at. So price action in naked forex is pretty awesome. And so, like, I didn't find anything or tune anything in until this month, and I was struggling last month to figure out, okay, I'm trying to like get to the bottom of naked forex, but things ain't really working out. So I'm gonna have to pause this real quick because my daughter needs me. All right, I'm back. I had to pause myself. My daughter was crying. But anyways, yeah, price action, trend structure, candlestick structure, and I'm gonna make it a little bit more precise on this. I know I made like a little quick snapshot, a little quick review on it, I think a couple of days ago. And so it's basically like a full tutorial on naked forex. I'm on my naked forex strategy. And like I said here, what am I doing? I need to share the screen. I had a lot of things going on today here. So most important thing, what I did is that after like hopping in on the 4 hour for so long, I'm like, man, like this isn't working out. Because even on Bitcoin, you're like, man, what's going on here? Like, it's going up, it's going down. What? This about 4 hour didn't really do much, right? Because it's just sitting at the same price. Since to me, like what I was showing before, it's just sitting here, right? It's sitting here, hasn't broken above 65, and sitting below 65. And then you're asking yourself, is it going to break above 65 so that it can try and target this high price here from last week at 71.50, or pretty much 7100. So that's your initial target for buying it, because it looks like it wants to keep going, right? But overall, if you follow the structure, because this is what I did, which I recommend, is put the horizontal line at the very top price and then put one down here at the very low price. Don't matter what time frame it is, to be honest, but I'm just gonna explain a little bit more on what went wrong here using the 4 hour. And so I was like, man, maybe like say looking at here, I'm like, okay, I'm looking to short it because it is not coming back to previous high. Okay, this is pretty much the highest price here, and it's not even targeting this price, and it targeted here, but it shot right back down. And then it tried multiple times, because you can see all the wicks here. It's trying multiple times to shoot back up, and it's losing strength. So ultimately, I would sell. But then all of a sudden, it will create a massive uptrend out of nowhere. And then you're like, oh, what do I do now? Right? And this happened to me last month, and I was like, you know what am I going to do to make it better, right? What am I going to do to re-strategize and refocus on going into naked forex trading? Because if I am, then what are the next steps, and how am I going to get myself in a better position for entries? Because that's the most important thing, is if you get on the right time, if you time your entries right, then you get in and you catch more profits and more pips. I said, you know what? this 4 hour isn't really working out. I like the 4 hour because it's every 4 hours. It's not based on the daily because it's with the 4 hours every 4 hours. So you get 6 4-hour candles in a day versus the daily candle. You're just waiting for that daily candle to close and start a new daily candle. So that's why I like the 4 hour for swinging. Now what I did was I said, screw it. I'm jumping down straight down to the 15-minute. Reason being is because with the 15-minute structure, now you get more precise. We see the massive price that shot down here that started the uptrend. We see a lot of resistance here. Okay. A lot of resistance means it's going to be a sell. That's just my point of view. That's what I started seeing on the 15-minute chart. By far the 15-minute chart, by far the 15-minute chart is the most accurate chart if you want to start learning on Naked Forex. If those of you that read the Naked Forex book, like, I'm going to hop in and put some indicators that I used to have. And I'm going to explain why those indicators, that'll be like my second part of the tutorial. But I'm going to explain why those indicators are so slow and why they can't even catch on to moving to the price that you're looking for entries, because that's the most important thing. Can you enter at the right time, right? You want to enter at the right time on selling and buying. That's it. And so when you go straight to the 15-minute chart, outline, like I said, what I outline on the 4 hour, right? The very top price and the very low price, it's totally different from 15-minute. Totally different. So now I'm shifting it lower because I'm just going off of candles closing. I don't ever put horizontal lines. I don't ever put horizontal lines on wicks unless it's like 2 wicks creating like pin bars or something and they really like match up. Well, I'm not looking for that. What I'm looking for is where the candles are closing that created resistance at the very top price, right? This very top price, pretty much 6,600, and then right here at 5,900 down here. Okay. And so, and this is on the 15-minute chart for Bitcoin. And now we get to see, okay, a very precise structure every single 15 minutes, and you can follow this structure, every 15 minutes versus every 4 hours or every hour every day, or the daily chart candles, daily candles. I know it's a little too much to look at if you're not used to looking at the 15-minute chart, and if you're not used to looking at a shorter time frame. And so, but this is where I started because I wanted to see, okay, we know that the highest price for Bitcoin was 6,600, and we know that the lowest price was 5,900. And from 66 to 59, you subtract that. So 66 minus 59, that's $700. So it's a $700 price gap, and the price is sitting at pretty much at 6,500. So it's closer to resistance. Can it create a massive uptrend? Yes, it can. But overall, what I'm looking at right now is to sell it because it hasn't decided to even break all this anyways. You can see one wick here. You can see that wick, this wick. So there's a lot of wicks that were attempting to come back to 6,600. So that would be my new attempt or new entry point on selling Bitcoin. And then my initial target would be this target first, right? All this right here at 62.5, 62.25, pretty much 6,200. And if it comes down, right? If it comes down, the reason why I'm showing you guys Bitcoin is because the Forex market is closed. So that otherwise, if the Forex market was open, then I would show you guys what pair I'd be looking at. All right, so we got the new, so basically we got 13 minutes, right? So the new 15-minute candle just started. And it's looking to bear down right now. I don't know how much volatility there is right now, but I don't really foresee a lot of volatility right now. I know it's only 4:30 in the afternoon. So this would be my initial target for take profit. Breaks this, then I'm just going to keep selling it back to pretty much to the 5,900 to the lowest price. Breaks the lowest price, going down even further. And so anytime it breaks support, like a significant support price, it will retrace back up. You have to remember that, especially when you're swinging. I mean, for every 15 minutes, I mean, we were to count every 15 minutes, right? I mean, this right here is probably like 12 hours. So, probably more than that. 18, 12, 6, yeah, it's 12 hours. Yeah, 6 to 18, yeah, that's 12 hours right here. That's full 12 hours. And then, yeah, the 17th, so pretty much a full day of consolidation, pretty much a 6,500, 6,400 for Bitcoin. So you have to understand that a lot of consolidation, pretty tight, narrow price action, not a whole lot going on here. And you're basically just waiting for a breakout. Anytime consolidates, you're waiting for a breakout. You have to look for those breakouts. You're talking about like a massive bearish candle, a golfing candle, or massive bullish, a massive bull uptrend push, massive bull candle pushing up, or massive bearish candle pushing down. That signifies, right? That signifies your direction. A lot of people look at the breakouts and say, well, could be a false breakout. I mean, from these breakouts, from what I've seen, you can see here this a bearish candle here that signified the downtrend, right? This one going down, right? This one going down, right? This one, right? It's rejected. You can see the price is getting rejected above here. That's what you're looking for. Same thing when you're buying for the uptrend, right? You can see the bull candle here. You can see another bullish movement here. And then they shot it down. And then they shot it right back up. Anytime, like I said, whether you're following a downtrend or an uptrend, you need to look at based on previous highs and previous lows. So I'm not jumping on different subjects here. Previous highs and previous lows, right? Because if we were to come back, right, and we know that from Monday and up until the end of today, right? End of today, we're pretty much end of New York sessions, right? It's sitting at 65, 64, okay? We know this is the price that's been sitting here for a while, past 12 hours. And so Monday's price was set around here, 63, okay? And then Tuesday, they shot it all the way down here. That's why I'm moving the horizontal line down here, because this was the lowest price of the week. And then we know that the highest price of the week is here, pretty much 6,600. So from 6,600 to, like I said, back to 5,900, then you're looking at, okay, can it shoot even further higher, because it's creating a higher price from the opening gap on Sunday. Well, to be honest, there is no open gap, but I mean, crypto runs 24/7. But with this structure, I'm just basing off of Forex, right? If the opening gap, if this was the opening gap and they shot it down, obviously you keep selling, right? But then all of a sudden you retrace it back up. So now it's breaking the open gap again. And then it's coming back, and it came back down, right? And then it came back, but never came back to break higher. And it's not even breaking higher. It's getting rejected so many times around here. And so I'm trying to relate it back to Forex, because the Forex market isn't running right now. But crypto is the only thing that's running. So I'm trying to show you guys, you know, a better view on, you know, my way of looking at this at the 15-minute time frame, and why I'm using the 15-minute time frame versus looking at the 4-hour and the 1-hour. Now, when, like I said, once the market picks up more volatility in the fall and the winter time, and you know, during, you know, tax season instead of the summertime, then I would be focusing more on higher time frames, because you'll get to follow that trend, you know, for 3-4 days or even the whole week. And like I said, we were to hop in on, I mean, look, I'll hop into a 1-hour here and show you guys. Notice that this outlines exactly with this previous resistance. And notice that this, I don't know how to explain this, but the 15, when you jump from the 15-minute chart, the 15-minute time frame, to the 1-hour time frame, 1-hour chart, I'm telling you, it somehow outlines previous resistance and previous supports. And it matches up with that 15-minute chart. Yeah, I don't know how to explain it, but it's actually pretty precise. That's why I like the 15-minute chart, and it outlines with the 1-hour. So you can hop back with the 1-hour to the 15-minute. What I like to do is when the, because you get 4 15-minute candles, right? And then after the fourth 15-minute candle, your new hour candle closes, and the new hourly candle starts. So you're breaking it down. So hopping back from the 1-hour to 15-minute, that way you're like, okay, I'm not gonna get myself caught up on here. What I'm showing you guys here on Bitcoin is that you can see it came back to previous high from last week's previous high, and shot down. It got rejected and shot down. Now we're in a pretty much a consolidated price, right? From 6,600, and the low price is 5,900, created from Tuesday. So we're coming into the weekend now, and what are we looking for? We're looking to see if it's going to create a new lower pretty much a new lower low, new lower price, right? To test 5,900 and to break lower. That's what I'm looking for. Unless it's planning to make a move to go up, and then from there, like I said, to test 7,100, and they have it set here at what, 7,150. I was talking about these prices on the 15-minute chart. So notice that the 15-minute chart and the 1-hour chart somehow just collides together in between. So you just can't go wrong looking at the 15-minute if you want to go naked forex trading. All right, you want to start naked forex? Hop in on the 15-minute chart and then look at the 1-hour. Set those two horizontal lines, previous highs, previous low, lowest price of the week and the highest price of the week, and then match it to last week's price, so that you're not confused. Because if it's going to break higher, then you got to look at, okay, what was previous resistance that made it short, right? This was previous resistance that made it a really long sell, long-term sell. And then this one, right, 65, right, came back down. All right, came back to 65.98, right, came back down. And we know that the 59 price is the lowest price right now. And I'm going to make a little bit more detail here. Let's talk about August here, right? August started. So we know that the highest price for August is 7,700. And right now, the lowest price for the month of August is 5,900. Let's break it down. We take 7,700 minus 5,900, right? That's like, I think 1,800. Yeah, I think it's like 1,800 right here. So it's an $1,800 price drop from where it's at. Well, not from where it's at right now, but from the lowest price. You have to ask yourself, it's been dropping, right? It's been consistently dropping. So is it going to come back to 7,700 anytime soon? I don't foresee that. And right now it's just sitting at 6,500 right now. Looks like it wants to retest at the 6,600 price to see if it's going to break that. And then we are looking to see if we'll come test the 7,100 price. And if it doesn't, then it's going to be a strong sell from my point of view. Okay, this is my point of view. Let's do the math. Let's do a basic math on price adding or price subtracting. From 7,700, right, to 7,100, it's a $600 price decrease. From 7,100 to 6,500, that is a $600 decrease, right? 6,500 right now, right? So I don't know how the math works out in correlation correctly like this, but it just does, right? I'm just doing basic math here. Let's do basic math on price action, right? If we were just it's minus 600. You take 7,700 minus 7,100, $600 decrease, and you take 7,100 minus 6,500. That's another $600 decrease. And what I said in my previous videos about Bitcoin, if Bitcoin drops more than 500, it's a strong sell. So you can see from what I'm highlighting is the same resistance structure here. Okay, these resistance, strong sell. Resistance, right? So now you get a clear picture on adding price and subtracting price. And then now by looking at the 1 hour structure, now prices are stuck there right now. And it's just going to sit here. I mean, it's just been sitting here for the past 12 hours. So you could have to wait for that breakout. When prices are sitting there for more than 8 to 12 hours, you have to understand there's a pretty strong consolidated, it's consolidated, and it's very narrow price action. And now there's going to be part 2. Okay, there's going to be part 2 of my video here. So we're going to add indicators. I'm going to delete this because I want to show you guys a difference for those of you that are still using indicators. And let's put the Bollinger Bands, right? The Bollinger Bands is already letting you know how narrow this price is. Now, like I said, if I was to take it off, you can. All you gotta do is look at the previous 8 to 12 candles. That's all you gotta do. Look at the previous 12 hours. If we're on the 1 hour chart, then you're looking at the past 12 candles, right? Let's count them down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, 12. That's it. The past 12 hours, it hasn't really shifted anything major, right? Not enough movement to buy and sell, unless you really want to capture. I don't know. It depends on your lot size of your scalping, but it depends. Yeah, depends on the lot size of your scalping. If 0.01, I know with JFX, and it moves $100 and make $10. I know that with the 0.01 lot size, and it moves $100 in price, you'll make $10. I know that. If you were to buy at 6,400 and they shift it up to 6,500, but the spreads are so far apart, so spreads are like 18 to 2,000, 1,800 and 2,200. So it all depends on so you might capture maybe $7 to $8 with commissions and spreads. If you think it's worth it, go ahead. So I'm going to go back and add the Bollinger Bands. Those of you that are still using the Bollinger Bands here, okay? And then I'm gonna add, I'm gonna add stochastic. You know, yeah, I'll add the moving average too. Okay, 1 hour. Oh, let me change the stochastic here. Change it to 5, because on the phone, on your MetaTrader 4 mobile app, the default settings is 533, not 1433 on TradingView. Okay, let's put this out here. Stochastic sit in the middle. I talked a lot about the stochastic. I really did. I talked a lot about it because it was my go-to indicator for crypto. I don't care about using it anymore. This is too much confusion, right? Candles are above the 20-day, and it's looking like it wants to go up, right? Based on what I see. I mean, stochastic hasn't made that decision yet. Based on this crossover, right? It's letting you know that it's an uptrend, and candles are still above the 20-day. So if candles are still above the 20-day, then you're basically still following the uptrend. But the problem is prices are so narrow, you pretty much are just waiting for a breakout. You have to wait until the bands expand. You don't have to wait for it to expand if you're just going naked forex. Because by this, all I'd be saying, oh, well, it's consolidating, so I'm not touching it. That's all I'd be doing based on what I see here. I don't care what stochastic is doing. What I'm looking at is that the bands are just closing in tighter and tighter and letting you know that the price is going to be very, very narrow. Maybe probably for the next couple hours until you start seeing it expand. Now, let's look at the 4 hours so you guys get to see this. Those are still using these indicators. Okay. Notice that, okay. So notice that here, right? Support above both moving averages, okay, above the 10 and the 20, right? But this is your 20, this is your 10, this is your 20. So it's above the 10, and it's looking to push higher. Notice that stochastic, right? It hit 80 and then bounced and crossed here. So it crossed the signal line. Hasn't decided to cross going back up. So you get confused, right? You're kind of, well, it is overbought, so that's why I sold it. But then it's bouncing off the 10-day. Your most important window is this main window, right? This main window. So this is gonna be a long video because I want people to fully understand my way of shutting off indicators and just strictly just going off the naked forex. Okay. With that, right? That way, you know, you don't have to be like, oh well, I don't know what indicator to follow anymore. I mean, to be honest, you have to know. You have to know what your primary indicator is, and you have to know what your secondary indicator is. You have to know what the most important indicator you follow the most. If that indicator is going to work out for you, you have to rely on something else. You can't just be second guessing where the trend's going to go or where the next candle is going to go. Otherwise, you're going to get yourself caught. That's the most important thing, especially when you have a bunch of indicators lined up. And so, but by looking at this, right? By looking at this, I'm looking at a full uptrend because candles is above both moving averages right now. The past, right? We're on the 4-hour chart, so it's more than 12 hours, right? 4 hours here, 4 hours here, 4 hours here, right? 3 bold candles. I mean, they're not that strong, but if they're above the 10, this is above the 10, this is above the 10, right? This is above the 20. These are above the 20. These are above the 20. So, but price is still narrow. Notice that your Notice that this is angling. This is at an angle, pointing up more than the upper band. But you have to remember that previous resistance, you know, it needs to break and close and break and close, not just the wick. Okay, you don't want, I don't ever go off the wick as a like I said, I don't ever go off like a wick, a candle wick like this, and say, oh, that's a strong buy. I wouldn't do that, because if you bought it, then you would have lost money, because this was the bear candle anyways. So you don't ever want to go off the wicks. You have to wait for that candle to close, because if they're going to send it back down and you see the pin bar and you see the wick, and that's a long bearish wick, oh, you better go back and sell it. So there's a lot, like I said, there's a lot of confusion here. I got confused sometimes because I didn't know I didn't even know what I was following. I was like, man, stochastic is too slow. The prices are moving too slow. There's not a lot of volatility. Then what do? You have to wait for the breakout. That's the number one thing. You have to wait for the breakout. Without noticing that breakout, you're not going to see where the direction is going to go. And so that's the most important thing. Now I'm going to take this all off, because I don't use any of this stuff anymore. A more plain and simple, well, I mean, yeah, it's more plain, it's more simple. There's no indicators to look at. All you're doing is looking at, okay, what I see right now is that it looks like it wants to come test. Looks like it wants to come test this price. Right? 65.5. If it doesn't come break above, it's going to create resistance, and that is my clear confirmation of selling it back. Selling it back, right, to, was it 62.5, that's 6,200, and then 59.5. That's it. That's it. And I mean, I know this is on the 4 hour, so what is going on with my mouse? Come on. So by going back to the 15-minute, right? By going back to 15-minute, let's outline. Let's outline it. Highest price. No, that's not the highest price. Yeah. Highest price and lowest price. Okay. Highest price, lowest price. And notice if I zoom back out, you can see that these two match up. And so, but it gets a little too confusing by looking at this. So that's why you want to look at a clear picture. And notice that we're at a very, very strong consolidation right now. And so your initial targets right now is where it's going to target 6,600 and close above, or if it's going to target 6,400. You want to narrow things down, especially when it's been consolidating for the past 12 hours. You know what your previous high is, and you know what your lowest price is of the week, right? 65. I mean, no, not 65. Yeah, 6,500 and the 6,500 and the 6,600. Yeah, 6,600 and the 5,900 here. And so we know that price is just sitting right here, right? So now all you gotta do is look and see, you know, where it's gonna go. That's it. I mean, that's pretty much it. I mean, down and quick and easy here. I mean, I don't know how much more simple I can do this for anybody. I mean, this is something that you know that I've been testing since last month. And then by looking at the 4 hour daily and weekly on Naked Forex, I'm like, man, this is getting too hectic because it's not working out. It wasn't working out because I was trying to look for long-term setups. You have to remember that in summertime, there isn't really a long-term setup. I mean, unless you were selling gold from April and up until now, then yes. But I mean, unless you were buying the U.S. dollar index from April and then until now. And so you're talking about like a 4 month swing. And that's if you have the money, the enough capital to hold on to it. So I mean, with this setup, like I said, with the Naked Forex setup, and if you want to get into it, hop into the 15-minute chart, set these two horizontal lines on the highest price of the week, lowest price of the week of that pair, and then if it's consolidating, you have to wait for the breakout. You have to wait for that breakout so you get to see the direction of where it's going to go, and then from there, hop into the 1 hour. And I showed you guys the 1 hour. Like, let me get on the 1 hour here, and I'm gonna keep these horizontal lines. And that's it. I mean, you notice that how my horizontal lines never change. That's the most simple way. I mean, I like like here's the thing. Like I'm gonna try. Well, I'm not gonna try. I am planning on creating a simplified forex system. My goal, like I said, I'm getting into coding now, and I'm gonna start programming. I want to make expert advisors. I want to make something like MetaTrader 4 and maybe MetaTrader 5, but I want to make a simplified version of trading view, a more simplified version of how I trade. I mean, I plan on publishing my book as a hard copy on Amazon and Barnes and Nobles and all that stuff. So this is like, I mean, I'll still be on YouTube, but I mean, this is like I just want to make it more as the most simplistic forex trading there is for someone that's coming in. I mean, it can't get any easier than what I'm trying to explain. I mean, I don't know like who else is explaining it and making it easier for you guys, but if like I said, if you get the book, the Naked Forex book, and it's too confusing, I mean, watch this video and understand it, understand it for yourself. And that way that you don't get yourself caught up and say, well, naked forex don't work. Every strategy and method works, but not for everybody. I mean, eventually you're gonna find your own way of trading, your own style of trading. You have to have the discipline, the mindset, and focus behind it. I don't really care what strategies are given to you. If you lack, like I said, you lack the mental capacity, the pretty much if you lack the mentality and the discipline behind investing or day trading or even gambling, whatever it is, right? You're not gonna succeed. I'll just be honest about that. And I even talked about that in my Cooley FX book of secrets in my YouTube channel. I talked a lot about habits. I talked a lot about being profitable, finances. I mean, you gotta know how much you're willing to put in, and so and how much you gotta know how much you're willing to risk. You gotta know how much you're willing to lose, right? And most of all is how much are you really trying to make every single day, so that you can consistently. Okay, I mean, like when you want to quit your job, you can say, I can quit my job because I've been consistently making 300-400 a day trading. I mean, if all you want to do is like look at the big professionals that are making hundred thousands of dollars or millions of dollars, whatever. I mean, you're just never gonna get there because you're looking at this big goal and you're not being realistic for yourself, and then you're not being, then you're just jeopardizing your whole account every time. with like, yeah, with I mean with the wrong with the wrong mental attitude of looking into trading, to be honest. And so, well, like I said, I mean this naked forex has worked out pretty well. And right now, like I said, you'll be waiting for a breakout, and it looks like Bitcoin is looking to test this 65.96 price here again. And we'll see if it closes above, because if it closes above, then it'll be a buy, right? And like I said, if you bought at the very bottom, if you bought at the very bottom, 5,900, then you're good. But to me, like I said, to me, I see pretty strong sells for all crypto, even if they are retracing. And yeah, I mean, I think what I'll do is I will make another naked forex video on the forex pairs sometime next week when I have time, and then show you guys a difference. Like I'll put the indicators on again, and then show you guys, okay, this is why I wouldn't follow the stochastic or the RSI or the MACD or or the moving average or this and that. I'll show you guys why. I mean, I'm more on Bitcoin because crypto is the only thing that's moving right now, so there's not a whole lot to look at. But you can see how precise by just putting the two horizontal lines, and it matches with the resistance and support on the 15-minute chart. The 1 hour, you can't go wrong using the 15-minute, hopping into the 1 hour, and hop back to the 15-minute. I mean, I can't stress that enough for those that want to get into naked forex. And so I know the book doesn't talk about that, but I'm going to talk about it because, like I said, there's more ways to perfect the strategies and methods and pass. Like I said, there's more ways to perfect your way of trading. There's more ways to perfect my way of trading, regardless of what I did in the past. Regardless of what you did in the past, there's always different setups and different things that you can add on, and then delete those that are not really working out, and then eventually you'll have something that's going to find that balance in between. The balance in between is to have that adaptability at all times. That's your balance. Don't matter if you're a high risk trader all the time. Don't matter if you're a conservative trader all the time. But you need to find that adaptability, because without being an adaptable trader, like if the markets end up reversing on you and you're 100% swing trader and you can't adapt to scalping, I don't know, you're gonna have to. I mean, mostly it's focused on swing. But if you have, like I said, the summertime, you're gonna have to adapt to the scalping, and you're gonna have to adapt to news events, and you're gonna have to adapt to unexpected events. And so, I mean, that's the most important thing. I mean, you have to adapt. You have to adapt in any environment whenever things don't go the way you anticipate, or when sudden changes, right? For sudden changes. So, I mean, like I said, you have to adapt anything in life, to be honest. And so, this is, like I said, this is the most simplified way I can talk about naked forex on what I see for naked forex and my strategy for naked forex. And so, if you like it, let me know. If you don't like it, I guess comment on me. I mean, if you think naked forex don't work, you let me know too. And so, other than that, I mean, yeah, I said, other than that, I mean, have a great Friday, and I'm gonna try and make, yeah, I'm gonna try and make things more better on YouTube for you guys. And like I said, I plan on doing programming, coding, and a lot more stuff. And so, those that do want the new book, let me know. I mean, it's on the website. So I'm revamping my website. I just uploaded some new stuff. So, but other than that, yeah, appreciate you guys watching this.